Welcome back to the IntentionALL podcast. We're very excited for today's episode. We have Calvin Beeke with us today in the studio. I'll give him a quick intro here. We're going to dive first into his story and then a bunch of selected topics and questions. So, Calvin, thanks for joining us today.
Pleasure to be here.
So an overview on Calvin, and then I'll let him add anything else he wants to. So Calvin is now 35 years old. He was born and raised in Northeast Grand Rapids. He came to Christ at the age of 16, and he has a beautiful family. He got married at the age of 22 to a wonderful wife, and he now has 5 children, ages 9 to 1. And in the beginning of his journey as an entrepreneur, he started off by flipping archery equipment. He's purchased his first home in 2009 in Grand Rapids. He also built and exited a marketing firm, Venture Creations. And in 2017, he went full-time into real estate and flipping and multifamily acquisitions. Today, Beeke Real Estate has over 50 full-time employees. They flip 250 homes per year. They own and manage approximately 200 residential rentals, industrial buildings, retail centers, and office buildings. Beeke Farms owns and operates over 1,000 acres of ground across the Midwest with a focus on recreational and timber ground. So as you can see, he does a whole lot.
Sounds like a pretty prideful intro, so my apologies.
I put that together, and I think it's very helpful actually for our audience to understand, like, who do we have here today? What have they done? What are they working on? So it's actually a great way to start the podcast.
Yeah, that's a good summary.
Awesome. Well, let's jump back to the very beginning, and we can dive into some of the details on this is kind of the picture now, but let's go through the journey of where you started and how that came about.
Yeah, sounds good. I think I always had the entrepreneurial, drive. I remember having, one thing I was into was fish and aquariums, and I always had I had a ton of aquariums. I made up a whole fish store, even though I had no customers. I would have the species and the price tag on every fish tank, or in my parents' basement, and I think I had like 13 fish tanks, and so I had this whole tons of effort put into this whole store, and never sold a single fish. Never had any customers. Maybe that's why I started a marketing firm, and so I think stuff like that was the dawn of it. Then I was working on woods projects, making cutting boards. Both my grandpa, I wasn't unfortunately close enough in age to work for either of my grandpas, but both were carpenters. So I felt like that was in my blood, and did a lot of woodworking, and sold a few things woodworking, and so I think that was the next phase. And then I was working for my dad at Reformation Heritage Books in the shipping department. So we kind of had use of this shipping department facility where I could ship stuff out very easily with that always had leftover boxes and leftover packing materials and stuff. So I was able to come in there in the evenings after my real job and ship out that archery equipment. And so that's the first thing that actually made money, was selling, buying bows and on Craigslist, getting arrows, sights, rest, all the components of what makes up a archery hunting setup, putting it all together in a case, and then selling these full packages. So that was the first real business, if you will.
Cool. And how old were you at that point with the archery equipment?
That was I think that started when I was 17. So it was probably mainly when I was 17 and 18.
Mm-hmm.
Yeah.
So on that topic, you had access to the shipping facility. What sparked the entrepreneur side of it? So the books is kind of, that in itself probably was kind of an entrepreneur, blueprint that you saw, but was there something specific on the archery, flipping, selling side?
I think almost every business I've ran is a integration of the hobby. For example, we have Beeke Farms, which is all land ownership, and that, I don't think land is the best place to cash flow, run a business. I mean, farming is a very difficult business. So I think what you're seeing there is you're seeing my desire for bow hunting and my love of nature, and you're seeing that play out in an investment business. So that I think that's just what the whole hunting thing was, because I love to hunt, and that merged it. So I think everything I enjoy doing, I see a path to business in there. So, which is a blessing and a curse. I'm not saying that you should always do that, because it's sometimes good to separate those things. So,
Right.
Hunting itself was my business with the marketing firm, because we produced a DVD series called Michigan Whitetail Pursuit. So I would hunt and film, the entire season, and film other people to produce that. It was very fun, but also very rigorous. And when I was done with that whole video series, which that video series is still going today, it has nothing to do with me currently, but it's still going today. And when I was done with that, I enjoyed hunting. I did enjoy hunting almost more than I ever had before when I wasn't doing that. So there is that. Yes, hunting and business were blended there. And then it's the same thing with the houses, as I always just loved houses and real estate. And then, the business integrated into that.
Mm-hmm. Really cool. Do you want to dive into the real estate aspect, the first deal that you did?
Yeah. So, 2009, I was graduating high school, and you guys are too young to relate or know that time, but 2009 just rocked Grand Rapids and rocked West Michigan and Michigan as a whole. I mean, it was a depression. It was people. It was an exodus. I knew, people slightly older than me that just leaving the state because they couldn't find work. And especially tradespeople, which is ironic how opposite that is today. So you got people exiting the state. You got, extra real estate. I mean, we all know what supply and demand does. So my first home was purchased for $21,000 or maybe $20,600. I'd have to go back and look. And I had $3,000 in my own cash, and my dad very generously loaned me $18,000, and because there was no bank that was going to finance an 18-year-old with no real job. The banks would hardly finance. It was very limited financing, which I think also brought down, prices. So, bought my first home. Didn't listen to I believe it was my PE teacher, Mr. Winkle, who he advised me not to buy a home in a rougher part of town. So I basically had the option. I could buy a decent home in a good part of town for $36,000, or I could buy kind of a crappy home in the hood for $21,000, and that's what I opted to do, was buy the house in the hood. And that was a hard lesson. I definitely should have gone and bought the nicer home, which I did some of that later. And so that was just the first hard lesson to learn. But that was my first deal. First 3 tenants I had in it, all were awful. Paid for a month, and then I had one tenant in that house try to pay me with a gun for just that's what she wanted her rent to be for that month. She's like, "Will you take this gun instead? I don't have money, but I have this gun." And I was wise enough to decline that at that moment. I like guns, but I was like, I don't know what this gun has done. I'm not dabbling in that. So I remember when she got her check from the government, I don't even know which program she was on, but I would drive her to probably one of the worst parts of town, where she would come out, and her rent was $800, and she would go into there. She could just run me over. She would give me $600, and then she'd be buying steaks and cigarettes right in front of me, with the other money that she had. And it was just, I did not know how to manage tenants at all. So that was the first experience. After that, I got a property manager, and we bought a lot. Myself and my buddy David bought a lot more homes in the hood. We bought a whole package from it was a guy who was a UPS driver, I believe. And he had built up a portfolio of 17 units, and we paid $16,000 per door for 17
Wow.
units. And they were all crappy, 2 units and 3 units, and we still own some of them today. And that, so that was, I'd say, my first large, real estate. I think we were 21 at the time, 21 or 22. No, I think 21. Um, that also did not go well per se. The beauty of that, though, is each year real estate was now flying up in value. So every time, it's almost like the market bailed us out on our bad decisions, and then we started buying good rental. Then we started to actually have rentals going well in good areas with good families, and yeah.
Mm-hmm. So for that first house, sounds like you just bought it with the intent of it being a rental.
Mhm.
Was there a certain person or book that you read that pushed you in the direction of real estate? Because previously you were more involved on the marketing side.
Yeah, so real estate still wasn't full time for me, like I said, until the 2017 thing. I think real estate was always just kind of on the side for my life. Like, I always viewed rentals as passive income and investments, even though really when you're managing themselves, they're far from passive. So in the meantime, I was rolling out the hunting DVD series and running a small marketing firm, like mostly social media and SEO and those types of things, video,
Mm-hmm.
you know. Um, all that was pretty, just being a young kid in that sphere. I was never super techie, but like I knew social media enough where it wasn't that hard to get. Businesses were just grasping it, then, and getting into it. So I was able to land a lot of little clients early. Um, and then as the marketing firm got serious, um, my real estate was always kind of limited to acquiring a rental or two per year, and then sometimes doing like one flip, per year. Usually like a live-in flip. I would just buy the house to live in and live in it for a year or two and sell it, type thing. So
Mm-hmm.
real estate was always on the side in the evenings. The marketing firm, the DVDs, that was my day job. So,
Right.
but I was self-employed, from the age of 18 on, really, until I sold the marketing firm and went to work for that company for a couple of years. So,
Cool.
In working for that company and then starting your own avenue of doing your real estate, were you hands-on, like all hands-on in the first beginning of your own ventures?
yeah. The what do you mean by that question?
Yeah, so I'm asking, when you first got into real estate, not working for another company,
Mhm.
like for yourself,
Mhm.
were you just all hands-on, like doing the projects
I
yourself?
see, I
You,
see.
you mentioned that you had your live-in flip.
Yeah.
I imagine that was probably you doing all the work yourself, but
Yeah.
outside of that, were you also doing the work?
In limited fashion. I mean, that's I think a lot of people see real estate as they see a deterrent of their limited skill set. I think almost the reason I was able to scale in real estate was because of my limited skill set.
Hmm.
I would lay plank flooring. I would, set kitchens. I would paint, but I was still calling plumbers, electricians. In 2009, in 2009, I was able to get a plumber to work for me. An older, very respectable plumber was working for me for $15 an hour. So he didn't have other work,
Yeah.
and so that I was able to find those contacts you know, to work. So my skill set till today, I know what everything costs. I know I can walk into a house and assess every problem that the house has. I can really find problems well and assess a house, build a budget, know what the furnace replacement costs, know all that. I have no idea how to swap out a furnace.
Mhm.
So that's my skill set was always limited to an extent.
Yeah.
I never had a career, working for a builder or anything like that. So
Okay.
I always felt like that was a limitation until a few years ago, and I kind of realized, like, because of that, I was able to focus on the next acquisition rather than
Mhm.
spending all the time on that project.
Yep. Yeah. Cool.
So it sounds like that almost forced you to outsource and in a way like position you to be able to scale easier in the future just because of the nature of being limited with certain skills. You basically had to hire it out in some way, shape, or form is
Yeah.
kind of what I'm understanding.
Yeah, I think that's a good summary of it. I think that the ability to scale was a little bit accidental on the limited skill set. Real estate is one of the beauties of real estate is it is so scalable from a passive income approach. Is flipping houses is less scalable than rental home. Purchasing rental homes, multifamily, and commercial real estate is there's perhaps nothing in the world that's more scalable than rental real estate. But yeah, the flipping business is harder to scale, but I think scaled to some extent well because of the limited skill set, because it was figure out the plan for the house, which vendors am I hiring, and then the employees kind of followed.
Did that same principle apply? Did you notice it applied to your marketing agency as well, and maybe even when you were flipping bows and such? Did that same kind of pattern apply to those ventures as well, or not so much?
I don't think so, but yeah, I think those were more like the owner and my one or two employees was the operations.
Got it.
So I think there was less scalability on those. I mean, you can obviously scale a marketing firm today, but we did not reach a large scale. That was more small group of employees. I was in the operations of that each day.
Gotcha.
So I am super curious to know, because based on what I've heard so far, you did the house when you were younger. You were like, man, I didn't know how to manage tenants. And then you did the smaller portfolio when you were 21. And you said, I didn't get any details, but you said it didn't go the best. So I'm very curious to know what kept you on the trajectory of real estate with kind of those beginning hurdles. And like for me, if I was offered a gun and I'm 18 and I'm like, I think I might not do this anymore. Like, I'm just very curious to know what the motivating factor was or what the light at the end of the tunnel was that kept you on the real estate track.
I ask myself that question some days too. I think that I could never get over the fact that I had bought that home for $21,000, and I had found in the drawer of that home, I'd found the paperwork from the mortgage that guy still owed $90-some thousand on that house. So obviously I bought it as a foreclosure. That guy, which if I was in his shoes, I don't know what I would have done. But how do you keep paying on something that's worth $20,000 to $30,000 when you owe $90,000 on it? It's I mean, from the moral side, you should pay what you owe, and I hope I would do that. But many of these people couldn't, because it went along with job loss and the economy getting rocked. So to answer your question, I really believe that real estate would come back to those same values. I didn't I couldn't have shown you data to prove that. I just felt that it was one of those things. You just grow up in West Michigan, you kind of believed in the place, and I believed in real estate, and it just blew my mind that $20,000 could buy you some real estate. So even at that number, at that age, I knew that $20,000 was a lot of money, but it wasn't that much compared to what it would take to build something. So, I think I couldn't get over that fact. So once I had one asset stable, it was, oh, all right, who can I find to lend me the next $30,000? And that's what we did. Like, I don't think I had a bank loan until like 4 years into it. It was all just finding my next friend's dad who had $30,000 to loan me. So
yeah. So it sounds like you understood that there was a future potential, and even just looking at the past and saying it used to be worth this. So there's a good chance in the future it could bounce back, even if it's not 100%. If it gets to 50, 70% of that, it'll be well worth it.
Yeah, I believed over I think I believed over the course of the next 10 years that it would get back to where it was at. And I think that was just a gut feeling. And I think, looking back now, obviously it was a good gut feeling. But data would prove that as well, that with certainty that would happen.
Right.
So,
So what was the next step in the real estate journey after it sounded like you did it with a partner, maybe the acquisition of the smaller multifamily portfolio. What was the bad part of that one, or what didn't go as smoothly in that one that you mentioned earlier?
I'm quite against owning old real estate right now. So it wasn't just I want to be careful when I say buying homes in the hood, because I own property in the hood today. I own property with, long-term tenants. I own property in good areas, bad areas, great. I have great people. I'm sure I have some bad tenants today as well that will show themselves to be bad soon. It's the nature of that business. But when you buy 17 units and they're all 100 plus years old, you're going to have much more maintenance than if you buy, you know, uh, lesser amount of properties that are all 50 to 70 years old. You'll see that even in our flipping models today, as we're always underwriting a much larger emergency budget for old real estate, because things just go wrong. You have knob and tube, old electrical in the walls. You have more, foundation issues. Some old real estate is built quite well, but a lot of it is not built to today's codes, and you see that. So, yeah. But what went wrong? I mean, still in 2011, 12, there was the tenants we inherited were not vetted well. So when we tried to raise rents, it just didn't go well.
Mm-hmm.
So tons of maintenance. I would summarize it as a ton of maintenance issues and a lot of bad tenant relations and non-payment, and so.
Yep.
But the beautiful thing about the market going up is selling a couple of those duplexes would bail us out. So, and I would say a shortage of cash. We just underestimated the amount of cash we would need after we were young. We didn't, the most I probably ever brought in that marketing firm was, the most I ever paid myself was probably in that $15 to $20 an hour range. So there was no big income to pull from to go fix all these rentals. So the only way forward, when we ran into needing multiple roof replacements that we didn't anticipate, was selling one of the duplexes at the time, which the market was going up. So that would pay for those, 2 roofs that needed to be put on. So we were also borrowing almost 100% on the purchase. So it wasn't, it wasn't like we had the equity to pull from,
Right.
either. So I don't buy rental real estate today at, I'm putting money down on all of them. I don't buy anything at 100% financing. But when things were $17,000 a door, you could kind of get away with that stuff.
Right. And that would be from a private investor, or that would be bank?
That was all private money. Yeah. On that portfolio, there was some point there where I think we bought part of that portfolio. I think that was our first bank loan with United Bank. I think we got loans on 1 or 2 of those properties where we put some of our own cash in and got bank loans. That was my first, bank loan experience.
Okay. And what deal was that?
That was on those 17 units. I think we still own, it's on Detroit Street. We still own that piece of real estate there I think United Bank loaned us $48,000 or something. So,
Okay.
Cool. You mentioned that your first 4 years, you were all private investment.
yeah.
Right. Was there like a hump of fear that you had to get over in asking people for money, or how'd you work through that in your first couple of years doing that?
I did not have fear asking people for money.
No.
Mm-mm.
Do you know where that stemmed from?
I don't know. I have fear of, I don't like, I don't enjoy, I have fear of things. I don't enjoy like conflict or, there's things I'm afraid of, but I don't think that was ever one of the things I was afraid of.
Okay.
I think I believed in it enough that I 100% believed I was going to pay that money back on the timetable that I set, and I completely believed in what I was buying. So I think that eliminated the fear of.
Yeah.
It was like I know they might have fear, whoever's loaning me money, and if they believe in it as much as I believe in it, then yeah, didn't have fear.
Okay.
Real estate is always, to me, the easiest thing to loan on too. It's much harder. I probably would have had more fear saying, come invest in my business and, loan me this seed money, and I'm going to go create these widgets and we're going to hope that they sell.
Right.
That I would probably have more fear in that.
Right. Yeah.
Real estate, I feel like it's just established. I'm buying into something that's an established thing that's going to have that value. So you're going to have that collateral where if I do default, you can have that real estate.
Okay.
So it was always one investor per house. I wasn't getting, 7 investors to very messily combine on one house. It was always one note and mortgage per house.
Okay.
So there was strong collateral for each loan.
With the 17 properties or unit portfolio that you purchased, if you would have done it differently or the ideal way, whatever that would have looked like back then, how would that have affected your path? Would it have sped things up, or just, I guess, how did that mistake affect the journey at that point?
Yeah, that is such a good question, and that's a question I've asked myself. If instead of buying those 17 units, I should have already learned the lesson. I was already like 3 houses in before I bought the 17. So I should have already learned the lesson that buying old real estate in rougher areas is not what I am good at. I knew guys who were good at that, who just knew how to handle, I don't know if I can put it nicely, knew how to like hack things a little bit better and just knew how to deal with, knew how to manage tenants better. I should have learned at that point that I wasn't good at those things. I should have not bought those 17 units. I should have gone about 5 single family homes in an area that I knew better and was a better area. That's what I should have done, is bought, and because that's what I did later. And that's what continues to go so well, is some of those single family homes in moderate areas, so that's what I should have done. Would that have put me on a faster, better scale? Yes, I believe it would have. Those units sucked so much cash for so many years that I think the growth curve of my business, hit that plateau for a while there. But I learned a lot of lessons on that stuff too. So
right, that makes sense. So it would have, if you would have bought fewer, higher quality, newer builds, it would have, over the long term, been faster scale and more profitable if evaluating it compared to like all the cash that the 17 units ultimately drawed out and such.
Exactly. Yeah. I think it was sucked into that number of doors. I would caution anybody to be careful on that. Is like, I think at that point it was like, oh, I'm, the fastest path to owning, we called them doors. People refer to them as units or doors or, rentals. A duplex would have obviously 2 doors. I thought I was on the fastest track to 100 doors. That's what I, wanted to be on. And I think that was a bad plan, a flawed plan inherently. To be on the track of growth, I should have been looking at, the safety of the, strong cash flows with good tenants on houses where big expenses wouldn't hit me.
Got it.
That's what I should have been more geared towards. So
yeah,
I was always sucked into that number of doors, and then that rent growth. I would always look at that top line. What are my revenues? What are my rents? It took me a long time to be like, oh wait, there's expenses here as well.
Yeah, gotcha.
How long were you in owning residential real estate before you stepped into, say, like commercial or industrial? or the retail?
Yeah, so I think one of my favorite steps was to start purchasing apartment buildings, and I'm going to try to guess at these years, but I think 2016 maybe was my first apartment building.
Mhm.
And once I caught the bug of investing in apartment buildings, and this was less about this. This sounds like I'm just growing that door count again, but this was more disciplined investing. This was a lot of, I was targeting like rural, almost small towns. Like, for example, my first 12 unit was in Lowell. I actually just sold it, painfully. I don't get very emotionally attached to real estate, but I was kind of attached to that one. I pretty much turned every single one of those units by myself with a friend.
Wow.
So that I have a lot of blood, sweat, and tears into that place. Basically 2016, 17, I started buying those apartment buildings and would buy like generally 2 a year. And those were arranged in 12 units, 24 units, 30 units, type complexes, nothing tremendously huge, but everything in that range. And then I think 2020 was my first commercial
Mhm.
purchase, first like industrial / office building. So, and then then caught that bug, and that is my favorite space. I mean, I kind of enjoy them all. I can. There's a medical office building that I love. I mean, a couple retail centers that I love. Yeah, a couple industrial buildings that I love. So I'm not sure if I have a favorite
Right.
space anymore, but I do enjoy the commercial over the multifamily. But I get the attraction to multifamily as well. I still like multifamily.
Yeah.
As well.
You mentioned that you had with residential, you had a certain door mount that you wanted to reach.
Mhm.
What is like the correct term when you're reaching out into like commercial or industrial? Like, do you
Mhm.
call it doors as well, or square
No.
footage, or how do you go about that? And also, what are your goals there?
I think you're really just looking at commercial so long term. I mean, I think you're really just looking at what's the net worth of the portfolio and what is the cash flows, equity pay down. What is the net worth? What is the cash on cash return or the ROI on these assets? So, yeah, I think that's the principles we're buying under. So if we can sell a duplex that is cash flowing well, but we have a lot of equity in that duplex, and that is now a down payment for the next commercial building, our cash flows might be similar, but our debt and we'll sign up for more debt, but the real estate is there's more value there. So you might be trading in that duplex for $300K to buy that $1 million commercial building, and
Yeah.
you're going to have more in the long run. You're going to have more debt paid out, more appreciation,
Mhm.
and similar cash flows, which does equate to a much larger return.
Right.
So there's so many different ways to do it. You could do a cash out refinance on that duplex and go buy more duplexes.
Mhm.
What I love about commercial is the numbers are the numbers. So we've always been able to produce a pro forma that says what the building is going to do with the existing tenant that's in there when we buy it. And I mean, something will go wrong at some point, but to date, like the numbers we projected are what's being produced, sometimes better. Whereas the struggle always with multifamily for me is that often the numbers projected on paper don't actually end up happening.
Yep. Yeah.
And you just get hammered with expenses and in the commercial world, generally the commercial tenants generally do what they say or what they're obligated to do.
Mhm.
I mean, we have tenants like Starbucks and Chipotle, and I'm about to have like a Little Caesars and a Subway. Like those tenants they do what the contract says
Yep.
to do. So
Yeah.
Right.
Mhm.
They have a lot more stake in it than just, I mean, you living in a home is a pretty big stake, but operating a business out of a building is like, you have a lot more incentive to keep the bills up and such. So that makes sense.
Yeah, there's a lot of reliability
Yeah.
there. So I'm sure we will undergo, trials in the commercial world, and I will get ready for that day, and try to have whatever those cash reserves are necessary to weather the storm and weather vacancy. I mean, we have had vacancy before and release spaces. But I do enjoy, if you can't tell, I do enjoy that commercial, more than the residential.
Yeah.
So.
So for that first apartment building, I know you mentioned you did it with a friend. What was your structure like at that point? Were you still using private money? Did you have a bunch of partners? What did those dynamics look like for from stepping into the more 1 to 4 unit properties to the multifamily properties?
Yeah, so I have lots of partnerships. I have had lots of partnerships. That particular 12 unit, I fixed up with a friend, but I did own that one on my own. I did own that one myself. My down payment basically was, I sold my marketing firm. It wasn't like a huge payout, but it was enough of a down payment or enough, close to enough monies to produce the down payment to buy this. So my first purchase was that 12 unit, a brick 12 unit Lowell. It was $40,000 per door, so that's a 480 if my math's right, or 485 I think is what I paid for it. Then, and average rents were about $600, per unit. It was 9 2-bedroom units, 3 1-bedroom units, and that's pretty much a summary of the building. So then as each unit turned, I would go upgrade the unit and then rent it out for, at the time, probably more like $800 per unit. And then today they're rented for like $11.95. So it's pretty basic 2-bedroom, 2-bedroom unit housing for a suburb of West Michigan. So right now, but that unit, I just sold that 12 unit couple months ago.
Okay.
Yeah, it sold for one. I think it sold for 100 and I don't know what it is per door. I think it was a 12 unit. I think we sold it for 1.45 million or 1.4 million, somewhere in that range. Which is about the 1% rule for the rent revenue it was producing.
Right. So I know you mentioned you've been in a lot of partnerships. What guidance would you give to someone looking to get into a partnership? What guiding principles or maybe more specifics would you just put out there or advise people on?
Do what your partner wants and everything will go well. I actually mean that for real. Like most of my partnerships are in passive or are in apartment buildings or commercial real estate. My favorite partners are the one I have a lot of the partners are business owners who are very good at things like conflict resolution and can have some very strong characters. And yet when we're in these relationships together, we really set the tone for, not a lot of, we see very little conflict in the ownership of real estate. So I think that partnerships within real estate, within where you're not with each other every day are so much easier than active business partnerships. So in starting an active business, I would have a ton of, caution, concern. I would say, when starting an active business, that is going to be that you're going to be working on it 40 to 60 hours a week or more. I would, unless absolutely necessary, find a way to avoid, partnership on something like that. On anything that's passive, like land ownership and multifamily ownership, those have gone very well. I'm trying to think of why or how those go well for us. I think I just have a great team as well. So there's a couple guys in office, David, Rob, Andrew, that just do a good job of managing these rentals. So perhaps that's, the ticket for things are just going well. I mean, obviously partnerships generally only break down when things are going poorly. So, keep things going well and you won't have issues, I guess.
Yep.
I think we're always very upfront on the numbers and on the risk. And like right now we're putting together a deal that a lot of our employees are buying into. So like at our workplace, we don't offer 401ks, matches, or anything like that. I have nothing against the stock market. I have money in the stock market myself. But obviously real estate is our favorite investment tool, and we are putting together a deal on another retail center with about 10 of our employees. And so I really love that kind of buy-in, from the team, because it really shows the belief in what we're doing. But that asset will be managed well, and that retail center has tenants like Miracle Ear and T-Mobile and Tobacco Shop and an H&R Block and things like that. So that mix of kind of corporate and local tenants has been pretty solid, for us. So that, yeah, I'm kind of rambling on the partnership thing because I'm thinking about all these partnerships, as I go along. But I just think real estate's kind of an easy place to run partnerships. So, so my main business of flipping homes, which is what I spend 95% of my day on, I do not have a partner on that. So that sort of, I set it up. It is set up with profit sharing. So technically speaking, I own the whole entity. However, I mean, we have profit sharing. So there are people, the job site managers and the employees who run that flip have profit sharing just on the projects that they're involved with. And then the team, the office team, which is about 10 people, once you've worked there for a couple of years, you have the opportunity to enter a profit sharing program. And that, so how the performance, that's a quarterly payout, like how the business does is how you get paid. So
cool. That's very cool.
So in that form, it is a partnership, right? So that's the form of partnership I like with an active, where you're just with each other, all day long. And it is. I like that profit sharing partnership.
So for active businesses, incentive based, that creates alignment for everybody across the board. And then if they're more of a capital partner, that's a little bit of a different story.
Yeah.
Separate structure.
Yeah.
Perfect. Yeah, that was super helpful.
That was a better summary than what I gave.
that was a perfect answer.
Talking more on Beeke investments and less on like partnerships, but now like your role, your team, and leadership. Can you kind of just give us the whole rundown on how you manage and operate in Beeke?
Yeah. So it's changed a bit over the last basically I guess a decade now. But it started out with myself, and then I would have one of my core employees. His name was Bob. He knew a lot more how to fix a house than I did. So we'd show up to work every day. It was doing one flip at a time. We started out doing, we got about 10 done in that first year. And that grew to like 3 employees. And then now I was starting to have like two active job sites at once. Then I was starting to work more in coffee shops, and I had like a gym membership at MVP. I barely ever went to the gym, but I went to their workspace every day. And they had like a public workspace, and that was a really good environment. I actually met some real estate agents there who still work with me like almost full time today that I met there. And so then then it came to a point where I think we were doing, 30 to 40 flips per year. And then I hired an in-house, agent. Somewhere in there, COVID hit. So then we were working out of Ferris Coffee, real close to here. We were there like every day, all day. We were just waiting for the day where they kicked us out. Like it was a very cheap office rent. It was a $5 coffee per day was the rent.
Yeah.
And so at that point it was an office staff of 2 and a field team of about 10. So my day would be kind of half in the field, running around to Lowe's, um, meeting vendors to get quotes, and then I was starting to do very little, painting, flooring, things myself. And then it kind of started to morph into what it is today, where we got, we bought an office building, started to have an office staff of more like 5 people, and then we recently, or moved about a year ago, and again into another office building that we bought, and we have an office staff now of about 10 people, with about 40 people in the field, and then probably another 40 people ish on contractor crews that are not on our payroll. But that sort of work full time for us. They work under, a different entity with different ownership that I will basically feed them houses, and then it's a sort of, again, a profit sharing program. And so that's pretty much what the business is today. So my main role is to help like find and fund these deals. So I'm really making sure that the business like buys a house a day and sells a house a day. That's kind of the top level of what I have to do. So
Very cool. Yeah.
and I still have, everything is very, Zach is my main job site manager. He joined us 2 years ago, and so he manages the 11 payroll crews, and then so he will tour a house that we get keys to. He'll make a video tour. I respond with the video tour scope of work, and I will usually hit every single house like once as it works its way through the pipeline, maybe twice. So that's how I'm able to how we're able to manage the volume of homes, and have me almost not like get in the way of the timeline of the project. So, so right after we do this podcast, I'll be going to like just do one check on a house where we have some concerns about like the kitchen layout, if we can get an island in there or not. So I still am like involved in the day-to-day of that. So, but if that house, I'm doing that because that house is directly on my path back to the office. If that house was in Holland, I wouldn't have time to be involved in that decision.
Right.
So,
Yeah.
So for your businesses, you have so many people working, you've set up so many different structures, different partnerships and all those things. Did you have a mentor? Did you join like a mentorship group, or was it kind of just organic growth? How did you go about structuring all the different things that you have going on?
I definitely had mentors along the way. I had 2 immediately come to mind. One is my cousin John, who did a lot of what I did before I did it. He was a Calvin grad, went to was like a pre-med student. I don't know if he was on the path to becoming a doctor, but I graduated high school in 2009. He graduated college in 2009, and he just jumped. He found an investor and jumped just headlong into buying. He was buying like a rental per day, I think, something like that, and just jumped headlong into residential rentals. And then as the market climbed, he never really did he did the flipping. He never really did the multifamily, but he would sell like batches of 10, rentals, and then buy commercial real estate. And then today he's buying much larger commercial buildings, deals than we are, as well as buying businesses, and has like an operations team, so to speak. So so I'm not sure that I'll follow that path, but I mean, my path, I didn't spend a ton of time with him. We would go golfing together, and for a while there I was like working out of his office and rented his office. So there was some good synergy there where I saw what he was doing. And I mean, the flipping business, we've scaled to a much larger point than his was, and the flipping business is our main vehicle. I'm not sure that was ever that way for him, but more or less I often looked to his path and saw his advice on what to do. So I always looked at some of those mastermind type groups. I never joined one. I never, I still look at, maybe we should get some business consulting in today. I mean, I'm sure there's a lot that I don't know. I'm sure there's things that we could do a lot better on. So I'm still looking at some of those, I don't know, high level consulting type, paths that we could take and bring into our business. There are parts of our business that I feel are, broken or not what they should be. That there's always something to work on, on every day. It's not a perfect. So I'm always finding those. Those are things I do desire most is the problem solving is to find what are the pieces that are not going well here and how can I improve. The other mentor that comes to mind is Mike. He's an older investor who's invested in a lot of the flips, and Mike is I don't know, just a pillar of wisdom and no detail like misses. Like when analyzing a commercial deal, you can get really into the weeds on all the CAM expenses and what are the taxes going to do, and you make the purchase and all of these. There's a lot of details that could be missed, and he doesn't miss one of them. So there's my character is to just, I don't know, the bull in a china shop and just go take down the deal, and his detailed, the way he's different than I am has not only saved us a lot of money and a lot of perhaps costly decisions, but has been an example for me on having a lot of care and wisdom in the deal. So I'm sure there's been a lot more mentors than that I'm not giving good credit to, but those two come to mind.
Yeah. Awesome. I'm curious to know what your time allocation looks like today. I know you mentioned you're mostly involved on the acquisition and funding side, if I heard you correctly, but I'd love to hear what that looks like on a day-to-day basis.
Yeah, so we run, if you look at where our deals come from, I mean, probably 10 to 15% come through like agent referrals. So usually those agents will call me up and I go look at the house and make the budget, and I'll usually task one of our agents with like running the comps, and then we come up with a price, from there that we're willing to offer on this flip house. Another probably 10% just come from referrals, guys like yourself, just connect any connections that will just say, hey, I know of this house, and I take it from there. Another, 25% probably come from wholesalers, people who go get homes under contract, then present me the deal, and they're obviously making a wholesale fee on that transaction, and so we buy a lot through them. And then probably half of the houses we'll buy, or that we bought last year and that we'll buy this year, comes through our campaign, which is Gabe Buys Houses. I'm sure you've seen it or seen the billboards around town. But so Gabe she goes to probably 3 houses a day and makes the budgets and presents us the budget and the ARV and of the house, and then we'll make decisions and negotiate, from there. So those are all the paths of acquisition. So I'd say I don't know, half my day is involved in that part of it, of the acquisitions. Probably something like 30 to 50% of my day is involved in. I never know what the day is gonna bring. You never know who's gonna call, and so. But once you deal with like an agent on 1 or 2 houses, they're very quick to call when a house pops up and it's full of, the house is full of dog feces and fleas or bed bugs and, or something like that, right? Like it's something that would prevent it from hitting the open market, where it's too bad, or the family's in a horrible financial situation. They need cash in like 48 hours, so those are the types of things that we get called on, and swing in and make an offer and see what happens. So there's competition out there. We're not like, sometimes we're the only call there, and sometimes we don't know if we're the only, person there. A lot of times they're calling 5 people. So it's just make your best offer and you get 20-30% of them. So,
Yep.
so that's a good chunk of my day. I mean, I think a huge chunk of my day, like when I get back to the office today, there's a bunch of teams that are awaiting my communication on what is their next job. So I still use like markers and a whiteboard to lay it all out. So it's almost like playing a big puzzle where I'll lay out all the incoming jobs, so all the jobs that we're getting keys for, and then I'll lay out all the managers who need their next job, and then I'll start drawing lines and connecting the dots, and then I'll be like, well, geographically that doesn't make sense. That team's based in Hudsonville. I don't really want to put them in Lowell. So let me send the Hudsonville team to this Holland job, and I'm switching all the lines again, and eventually wind up with a plan that looks good, and then I'm informing the managers what their next job is, and then we're getting trash out quotes, roof quotes, getting the big vendors lined up, and then Zach kind of takes it from there. He goes to the house, creates a video tour. Everything we try to do all these things in blocks. Like I think the iPhone only lets you send like up to 4-minute video tours without it changing format. So like that's our guideline. Like Zach goes in, takes a 4-minute interior video, usually like a 3-minute exterior video. So basically I am vetting that flip, and this is after we already have bought it, and this is more of like, okay, we have the budget that we created, we have the comps, we kind of know what this house is, but now the real, like, Zach, who's going to manage the manager on this project, goes in there and makes the video tour. So there's always like 10% of my day that is involved with that component of just a very broad oversight on what is this project and what has to get done here.
Mm-hmm.
So,
right. And do you have any time allocation to the funding aspect of it as well?
that's mostly David and Andrew now in our office. So how that works is it's still the flips is all private money still. We still have not, so we own about 100 flip properties at a time, or maybe 115 now. And then we have about 75 private investors. And it's still like one investor per house, one note and mortgage. It's the same. We're almost using the same paperwork we used, like that I used for rentals like 15 years ago. So
Yep.
it's yeah. And those investors have a high level of trust for us. And I mean, they're usually, our average cost of money is around that like 8.7%. So it's not like a highly lucrative thing, but it's almost like we view ourselves as like a bank CD. So rather than going to the bank and getting paid 4% on a CD, you can park your money with us for that 4 to 6 month period, and you're making 8% or a little more. So that's mainly how we fund our deals. So that I was more involved with that. I'm very involved, very little with that today. They're very good at lining up the houses, and we're buying enough houses, and we're selling. So if we're selling a house for 400 and it had 250K of debt on it, they're very quick to find like the next purchase of like 220 or 270. Line up something very similar with that existing debt, and then they send an email to the investor. Would you like your proceeds back, or would you just like us to send you the interest check, and then roll your principal into the next deal? Mm-hmm. And 97% of the time, the investor rolls into the next deal. So
right.
That's nice.
Yeah.
So David's done an incredible job at new investor recruitment when we've needed it. Yeah.
Was that his background, or did he just kind of grow into that skill, or?
Yeah, he did. I mean, he did get it. He has a finance degree from Grand Valley. So, I mean, there was something there, but David's kind of been with me from day one. Like he was with the marketing firm, and then he stayed with the marketing when we sold it. He stayed with the marketing firm for a few years, and then a few years ago I rehired him, and like our operations. I probably from the day we hired him, everything got smoother, and he's incredible. So he literally will handle. He'll have 1,000 tasks hit his desk in a day, like honestly, and he gets them all done. Yeah,
that's amazing.
So,
how do you view the fix and flipping business in just the greater picture, do you kind of see that as your main source of more quicker, lucrative cash to deploy in these longer term investments like land and like longer term commercial units? Like, how do you kind of see the fix and flip operation?
Yeah, that summarized it well. I
Okay.
mean, the fix and flip operation it is a feast or famine business. So you got to be careful with it, because there's months it can spin off a lot of cash, and there's months it can be red. Like, it often will make our money in the spring, in the, that basically like late when, like right now, usually our best months are like March, April, May, June is when we're killing it. And then we can have 3 to 4 month stretches where we make next to nothing. So
Wow.
it's a feast or famine business. So you want to have good cash reserves. At the same time, when things are good, yes, it can spin off a lot of cash. And then, yes, I mean, the commercial real estate, like when you have to buy in today's numbers, whether it's rentals or commercial real estate, you cannot make a business off of going and buying residential rentals, like unless you're getting a big, windfall of cash from an inheritance or whatever. Like, everybody who's buying rentals and investment property today, like most of it is financed and run off of finance numbers. So your cash flows on residential rentals are $100 a door or $200 a door. Like it's a slow path to wealth. It's with commercial property. There we do have like retail centers and industrial buildings that do make a lot of money now. But usually when we bought them, they didn't. Usually it was over the time of, it's so competitive buying, out there, that sometimes you're buying things at close to zero cash flow and then improving them. So yes, the short answer to your question is that the fix and flip business is our job. It is what we do for an income. And then the land and commercial is and multifamily is that investment path. So
that makes sense.
The crazy thing is you can have a year where you make, you can work very hard and flip and do well flipping and stuff. But if that was the same year that real estate went up 18% in value, well, that crushes your, what you made on flips.
Yeah.
So, but you can't live off of, like, that's not a paycheck. That's just equity growth. So,
Right.
and you don't want to, every time that happens, you don't want to cash into that. You want to run a safe numbers. We love to be in that, like, in between that 50 to 60% loan to value, type ratio on the whole portfolio. So just because the market went up doesn't mean you should run to the bank and get that next loan.
Right.
So it's always good. We have these mix of buildings, right? You have some buildings that are strong cash flow. You've had them for a while and they're very strong cash flow, and you kind of just let that happen, and you don't get refinances. And you have other buildings where you're like, all right, it's, we don't owe much on this. Let's go. We're going to go target this building, and we're going to take as much money out of this building as the bank will give us. And that building will go to a very low cash flow scenario, but produces the cash to go buy, the next building. So, So yeah, I like a variety of those buildings. If you constantly do that, well, I mean, the next economic downturn we have, you're probably gonna die. Like it's probably not gonna go well for you. So it'll be interesting to see what these next years produce, is what happens in these different sectors of real estate.
Yeah.
So I'm still convinced that people are largely overpaying for multifamily today, and that. But maybe I'm wrong. What if rents have been pretty stale here for 3 to 4 years? Like, what if rents shoot up next year? It's like, well, then everything you bought suddenly looks pretty good.
Yeah.
So we don't know. We don't know where, any sector is going. But buy and hold real estate is a beautiful thing over the course of time.
Awesome. Well, I think we can segue into more of some of the specific questions. I know some of mine got hit on, which is phenomenal.
Yeah.
Tied right into the conversation. One that I have is more on the personal note from like a family dynamic standpoint and how you've managed that, had those conversations. I'm getting married this summer. So being in the entrepreneur space, I'm trying to navigate well. How do I lead well in our relationship and manage those expectations?
That's the hardest question you've asked me today. So,
Easy one to start off on.
well, I've made a lot of mistakes. I think it's funny how different our families. My wife's. You realize how different. I'm sure this is unique for everybody, uniquely different for everybody. But my family is so different than my wife's family. So, and somehow when you're dating, you like don't realize that as much, and then you get married, and my family was very like you'd have supper together, you'd have family. I had a wonderful family. You'd have supper together, you'd have family devotions, and then usually everybody would just go back to work. There wasn't at 7 p.m. everybody goes back to work as I got older and became like as homework shifted into real work. Like that's just what I did. I would work to in high school I would work with that archery business. I would start my work at like 7:30 p.m. and this is probably when I was like 18, 19, just getting out of high school, like going to Davenport and stuff. Like I would work for a couple hours, then my buddies would come over. We'd go to Applebee's for half off appetizers, and we'd spend our $4 on wings, and we were there all the time. So we'd also get like free. If you ordered a Mountain Dew or Pepsi, we never got billed for it. So it's like we'd always walk out of there with a $4 bill, and then we'd go back to my parents' house, go hot tubbing, talk business till like 11. Everybody go home, and I would usually go back to shipping bows. I'd go back to the warehouse and ship bows till like 2 a.m, and then wake up late and start the day over. Like that's just how I just rolled in the very like not normal, probably not healthy type role. I enjoyed it very much. And then to get married in my wife's family is very much like a eat supper and then socialize and engage with your family until 9:30 p.m. and then go to bed, which is probably more normal. So that was just over the first couple of years. I think like I almost wish I had flipped a few less houses and spent more time with my wife and like my young kids in those early days. So that's probably a regret I have. But her nature is not forceful at all, and yet still like I realized that I think whether Laura made this happen or I'm not sure how the decision came to be, but I think we eventually married those two philosophies where if I have to work an evening now, I probably would work like one evening a week, but I usually get home around 5:30 now, and my favorite time of the day is just playing with the kids, and so we have family dinner together, usually clean up, kids take their tubs and all the life events with little kids, and then we have devotions and put the kids to bed, and actually spend time with my wife, like so that I think I would be so focused on. But the natural part of me would just be so laser focused on all things business that I would forget about the most important things in life, which is not right and not biblical. But that would be my temptation or, my weak point. So I think it's very good that my wife highly prioritizes the family. I mean, she homeschools the kids. She plans, our vacations, and so we have this flexible schedule, and she, whether she tells me to or not, somehow I get the message of that I need to spend like adequate time with her family. And when I do, like this last weekend, went to our cabin in a hunting cabin in Wisconsin, and it was an adventure. The weather was crazy, and everything's ridge country out there, so you're hiking all these hills, and I mean we had a great time hiking, finding antlers, and and enjoying that quality time, with family. So, again, that was a long answer to your question, but that's those two. Again, our families were just so different, and I think that it took me years to understand how to handle a family the right way with those combinations, those good points of both of our family, experiences. So.
Mm-hmm. Yeah, it's super helpful. Just understanding that you're coming from different perspectives of figuring out how to blend those things together and come up with your own structure.
Yeah,
it's really good.
I'm sure we still have a lot to. I'm sure I still have a lot to figure out in those in that path, and as our kids get older, and it's just new challenges. But one thing is certain, like you're. It sounds cliche, but you're just not going to You're not going to regret any time. You're not going to regret time spent with your children. So
Right.
It is, I love that my work gets me so excited, and I love, as I'm taking my shower in the morning, I'm thinking about each task that I'm gonna execute today and a new idea that I have, but at the same time, like when I get home, and it's 7:30 p.m. tonight, and I'm laying on the floor. Like there's just not a better time than having my two youngest just crawl all over me, and there's no better time than that.
Yeah, love that. It's good. We kind of hit some of these along the way, but what have been your biggest, let's say, 3 challenges in business and lessons that have come from those?
Yeah, I think that number one is just would go back to that 17 units and all those tenant relationships, and really recognizing my weaknesses in those categories and what I was not good at. I think that other big challenges is like the challenge I'm wrestling with right now is like in this past week, I mean, we had 2 houses legitimately like flood, like, the entire basement and through the water through the main floor, like legitimately flood. And we have like there's days, this week where it's just like the phone calls you get, like in one day you'll have the house is flooded. What do we do? And a neighbor calls and just like, your tree just came down in my yard and on my fence. I mean, we own 100 flips at one time. When there's a storm that happens, like it's like one storm can cost us hundreds of thousands of dollars.
Wow.
When it snows, like the plow bill for all of the flips is like, $7 to $10 grand. So like just a big challenge is just, you got to make sure you have the cash in hand for these problems, and you can't. And the challenge is not getting emotionally. It's taken me a while, but getting to that point where when somebody calls you up and says a house is flooded, we basically just lost 80 to 100 grand because we got to re-renovate this house in a bigger way, and insurance doesn't cover groundwater. You're to hear those words and just have it roll off your back and not have an emotional reaction to it. Just what do I do next? Like I'm still getting to that level of discipline, but I've come a long way on that. That's been a challenge there, because how are you going to sleep at night if you worry? I mean, like again, last night I'm just laying in bed and the wind's just whipping, and like I know that's going to cost me a lot of money. Like I'm just going to get the phone calls in the morning of, it is what it is. So it's part of owning real estate. So. I think that third challenge is what we already talked about, is just would be the family I think there's just more challenges on the family time. It's like, I've let it. There was a time, New Year's resolution, I think, was to leave my office by 4:40 every day and be home by 5. And it's just like I failed miserably at that, and getting home at 5:30, 5:40 every day while still leaving the house at, trying to leave the house by 7. It's just things to work on. So,
That's good. Thanks for sharing those.
yeah.
Mhm. Yeah. I'm going to ask, kind of going back towards the personal side of things. You mentioned with your family, you guys do devotions and stuff. Can you share your testimony?
Yeah. I said in the intro there that the God worked in my life at 16. My dad and mom are both wonderful Christians, and so I grew up very much in. I grew up very much in a wonderful family with a very strong Christian education. Went to a Christian school, had phenomenal teachers that taught me the Word of God. I really came under impressions of just my own sin and need for God and fear of hell, like probably at 9 years old. I think I believe I was saved at 16, but I don't really know. Like there was a specific moment at youth camp where we're under the stars and uh, all brothers holding hands in a circle and praying for each other, and and I just remember being prayed for, and just at that moment feeling like that, okay, it's not of my own righteousness that has saved me, and God has chosen to save me, and by his blood and by his righteousness, that I am saved, and it's all of Christ, and I can give up and rest in that fact. So I think that is the moment that I felt at youth camp, and I love the Lord, and I know that I let him down often, and that grieves me. And there's no better feeling than being reconciled to God. And I mean, over and over in my life, I feel this. I mean, the prodigal son is probably one of my greatest, just stories of the Bible, and the fact that Jesus told that story, and I am him, and he didn't. That man didn't have to go back and work as a servant. That father saw him coming and ran to him and kissed him, and it doesn't have to be anything that I produce, and God takes the wicked sinner that I am, even in my continued reoccurring sin, it takes me, and my desire is to live for him and to do good in this world for him. So that is who I want to be, and I really desire to do great things. I don't think I'm my dad's a preacher and a speaker. I don't think that's my talent set, unless the Lord changes that and calls me to that. But there's a lot of exciting things that I am a part of and want to be a greater part of, as well. That. So I believe I was saved at 16. I was always, I had a friend who was saved at that same youth camp, and I almost envied his life because he was living a very rebellious life and was just instantly saved, and just total life change. And I'm like, so clear. And to this day, he's a mentor, friend, and wonderful father and Christian. And God just snatched him out of that life. That wasn't for me. Like I was always one of the good kids in school, if you will, and stuff. So it was almost harder to see the moment of when God saved me. But I guess that part doesn't matter per se either.
Right.
Yeah.
Right. But that it was that youth camp that where I felt God's work really, really in my life. So I desire to know a lot more of him, and just soaked in the word and great books after that. So I wish I could get back to more of that today. So, but speaking of those, I mean, we've been talking a lot about real estate and money, and that's like, I mean, that's the goal of all this, right? Is to be generous and is to help others in need, because there's so many people. There's no lesser amount of people in need than there was at any point in history than than there is today. Like it's we're in a world full of hurting people, and so I have a friend who has been going to a country and a third world country, and he's been rescuing girls out of the sex trade, and we've been rescuing families out of slavery, and so the fact that you can have some of your dollars go to help that stuff, like I want to actually go with him on one of these trips and be a part of this, and I think it is somewhat dangerous, and they've lost people doing some of these activities, and I don't know that I want to subject myself to that, but I don't know, if I look at God's word and the amount of sacrifice that we should make, I would like to do more, both through dollars and time in that. But it is so exciting to be able to. I was able to a few weeks ago engage with a family over Zoom who was enslaved their entire lives until now, and that's, I mean, can you get better, a better feeling than that, and the one guy that I expected it was a beautiful phone call, but the one question he asked me that kind of rocked me is, he said, why didn't you come sooner? And
Wow.
it's just like that question made me think. It's like, how do you answer that question? And so he's, this guy is suddenly, he's becoming a Christian. He's given his life to Christ, and obviously speak a different language, and this is all through a translator. But one of his sons was sold and is gone, and he'll never see him again, to the best of his knowledge. So I think that's what he means by that question of, why didn't you, there's so much pain and hurt and loss in the world, and there's so much we should be doing as we sit in our nice little cozy studio in North America here.
Yeah.
So.
Yeah.
Wow.
Well, praise God for
Yeah.
your testimony, for sharing that, and the work that you're doing with helping families. Like, praise the Lord that He's given you the life so that you can do the best with it that you are, to give it back to Him and help produce more people in the kingdom.
Yeah.
That's awesome.
Yeah, I am thankful to God for the opportunities, and I have not done enough, and I'm excited to do more, and I hope and pray that God allows me to do that and gives us the means to do that. So, yeah.
What would you say at this level of scale in your personal life, with having a beautiful big family and then all these different business ventures that have scaled significantly compared to when you first started? What would you say you believe about yourself now that maybe you didn't when you were in the earlier stages?
I don't know how much I don't know how much has changed from a, like, kind of a, I don't know, a who I am tendencies and character. I don't know how much has changed there. I do think that I do think that I'll say two things. One, have you ever read the book Gary Keller, The One Thing?
I have
Ever heard of that book?
not.
Okay. I think that it's been a while since I've read that book, but I remember that book really steering to me, like, kind of like, I got to stop skipping around and doing different things, and have this laser focus on real estate. And I was doing a lot of different entrepreneur things. I mean, one thing we haven't touched on here is just I had a number of other business failures, and things that just didn't work out that I put a lot of hours and time into to arrive at that. So not every day is fun flipping houses. It looks fun on HGTV, and it's not fun every day. I do enjoy it every day, so it's rare that I have a day where I say I didn't enjoy it, but I think yeah, it's doing that one thing. And being like, I wasn't want to be too, like, we have Airbnbs, for example. We have like 5 Airbnbs. I do not want Airbnbs to, even though they can be highly lucrative, I do not want them to take away from our flipping business and our main revenue, generator. I want like these guiding principles and this one road that we're on, and not all these deviations and off ramps. So if we're going to have Airbnbs, we better hire the best manager and have them manage, and we will review their monthly reports. I will use, like, probably one of the reasons I have Airbnbs is just to have, like, I kind of want to own a cottage and I want to have a family lake house, and I don't want to work on it every weekend, So I'll go there my 1 week. Am I a lake person? I don't know. I enjoy the lake and like, but not enough to just, not. I shouldn't say that. I love the lake. I love fishing. I don't desire to maintain a cottage, especially with my array of small kids that take a lot of time. I don't, at this time in my life, I don't enjoy, like, that's not my thing. Yeah. Probably hunting is my thing. So having these other Airbnbs, I just don't want that to be a distraction to the business. So, staying in that. I think that's one, I guess, to answer your question, is I think we've grown in that category. Is like our team is just like laser focused. And everybody's getting to that point of, I think is it the rule of 10,000 hours, where like, it's 10,000 hours before you're like truly good and experienced at that thing. And a lot of our team is like getting to that point. That's a lot of hours. So it's kind of cool to see that and say, these guys, this team is like, we're better at this than we've ever been before. And we don't know the problems ahead of us, but we know the things we can do to secure. You do kind of go from the growth mentality to the security. Right. I mean, it's a hybrid, but our goal on the flipping business, like, we should flip about 300 homes this year. Our percentage of growth grows in terms of the business. We're not doubling the business. In those early years, you're like doubling the amount of flips every year, and you're just like hiring left and right, and firing when you make a bad hire. And now it's much more of like, okay, we'll hire a few people, and we're not looking for any positions. We're only hiring like premium people that fall into our lap, and we are, creating the best form of profit sharing, for our group, so that they do the absolute. So they're there every day doing the absolute best that they can, and we're just staying in that one lane. So, another long answer to your question, but I had to think that one out.
Yeah, no, that makes a lot of sense. Just compared to the earlier stages, really getting into that one lane, one groove, laser focus versus going all these different directions, even though they could be good opportunities, but the value in just staying true to one thing. And it sounds like you're seeing the fruits of that, which is the skill level of your team and all that comes with that, just everything compounding. And that makes a lot of sense.
We are seeing that. I think in those earlier days, it was just like, oh, I'll do that. Oh, I'll invest in that. And it was very all over the place, and some of it worked, but I could almost think that any of those lines would have worked well if I had just done less of them. So.
Yeah. When you go hunting, do you feel like you get a break from work and career and life when you're out there in the woods?
Yeah. I think one of my favorite things to do is to go to, so we have a cabin in Ohio and a cabin in Wisconsin. That's where we do a lot of our land investing. So the land investing goes along with the hunting. So we're doing like timber harvests and lot splits, and we're selling off, we'll buy a big farm and we'll sell off like the farmhouse, then we'll sell off a buildable parcel on the corner, and then we'll keep the rest of the ground for, hunting. And then we'll do a select cut of all the walnut and auction the walnut off. And so, and all that involves still with hunting. So I don't, when I go hunting, I'm more like in the land business probably is my favorite part of the business right now. It's just hard not to be because it integrates. I love dirt. I love rocks and trees, and I love water. I love water features on land, especially, a good trout river. And so, I think that, yes, I think I get away as much as I want to get away from the business. I don't have that much desire to get away from the business per se, but because a lot of the people I go with are my work people. But yes, we do a good job of like kind of disengaging with you know the business and just focusing on hunting. So I think we had like 14 or 15 guys in camp at the Ohio Deer Camp, and
That's fun.
for close to a week, and it is a riot. So yeah, we talk. I mean, it's hunting, it's serious hunting, but then it's also, I mean, we haven't been in years past, but this year we're pretty disciplined about just, having some, having devotions, having like just, and a lot of guys just, that was their probably best time the entire year to just open up to brothers and talk about what they're struggling with and how they can serve God and their families better. And so I'm excited for this year's deer camp to just more, I mean, we need to be disciplined to integrate those kinds of things, because I look back at past deer camps and like we just went hunting, and we were going hunting with a bunch of Christian guys, but there wasn't the, the engagement, the glory to God that should have been given. And this year we got a, taste of that. So I want that more. So it is a good time to, get away from the business and, hunt and socialize and mentor each other. So
Very cool.
yeah.
Was it a good season?
Not the best for me this year.
No?
Missed. I shot a couple bucks. I missed by far in Wisconsin. I missed by far the biggest buck of my life. So I'm very good at getting on big deer and very bad at executing in the final moment. So you should see me in the final moment. I am shaking. I'm visibly shaking, quivering, like, I pretty much lose control of like the disciplines of making the shot. And that's how much it affects me.
Yeah.
Like I'd be so much of a better hunter if I wasn't as into hunting, ironically. So
you also said it was the biggest buck you've seen or had a chance to shoot at. How many points did you get?
He was
on it?
Yeah, he was only, I know the deer well.
Okay.
And he's on all our cameras, and he was, I did not expect that farm. I did not know well. I set up the stand the night previous in the dark. And so that was my first time ever hunting that farm. And it was I encountered him that first time. I'm pretty sure he got shot, but the frame was just incredible. Like I'm not going to tell a big fish story here, but but I've shot deer with more points, but this deer the frame on it was unbelievable. So yeah, I'll probably never see that deer again, and is what it is. So I think about him about a few times per day.
Are you primarily bow hunting?
I enjoy both, but
Okay.
bow hunting gives you a lot longer window, season to hunt. So yeah, I do more. Usually when we do deer camp, it's a bow camp in Ohio, and then so
Cool.
I enjoy both. Ironically, didn't grow up in a hunting family per se, but just had a high school teacher, and his son was my best friend, and they were into hunting, and went squirrel hunting with them once, and I just loved it and never have not loved it since. So
that's fun.
I'd like to do more fishing with my kids. Tend to like so far I've liked fishing more than hunting, so I have largely gotten out of fishing with having kids. So I'd like to do more fishing, with my kids, which we do a fair bit of now. So
fishing for younger kids a little better with like, you don't have to wait as long. You're a little bit more active. You can talk. I can see how that works out better. Cool. Thanks for sharing.
Any additional questions?
That's it for me.
Covered it pretty darn well.
Really cool. We'll run through the final wrap up here.
Okay. What are your guys' real estate goals for Are you all intentional about owning real estate?
Yeah. Yeah.
Is that the path you're all? I know you are, but
Yep.
yeah.
Yeah,
so-
pretty fairly.
Yeah, there's a mastermind of 5 of us. 2 of the guys are not here, but we're all in real estate investments in some way, shape, or form. We're working towards that. So for me personally, the big target for this year is consolidating the family portfolio. It was funny that you mentioned the older real estate being a pain. We're experiencing that scattered site as well. So looking at either new development or 1031 into a newer product, but that's what I'm working on this year.
Okay. Nice.
Yep.
I'm studying for my builder's license. So plan is to test in April. I'm just working my way through the like prep tests, making sure I know everything that they're going to test me on. And then I will be, I have been working on a relationship with, it was actually my premarital mentor. He does real estate investing and flipping. So I've been working on a relationship with him for the past year, and we'll be looking for doing a venture with him, at least
Okay.
one to start,
Okay.
and then working on several different relationships with people that have their eyes on properties and want to get into flipping or renovating and holding.
I see. Nice.
Mhm.
That's cool.
My goal is just to get into a house hack deal
Okay.
in
Yeah.
the next, I'd say, 6 months or less.
Yeah.
And then I also work for Ryan Dosenberry for Lakeshore.
Oh, that's right. You
Acquisitions.
I mentioned that, yeah.
So just continuing to grow in that role. And
When did you start there?
about 9 months ago,
Okay.
end of May, beginning of June, give or take.
Okay.
Yeah, it's been really fun. Sold a handful of
Yeah.
my deals to you, so that's
Yeah.
been super fun.
Nice.
But yeah,
Are you involved with the one in Howard City, or? I just drove by one last night that yeah, I got to give back to your team on the details on that one. so,
Got it. No,
yeah.
I don't think that was one of mine.
Okay.
But yeah, house hack, and then after that, I'm also just kind of thinking ahead of how I want to scale faster. So I definitely picked up a lot of good nuggets from you and your journey and how you just scaled, because that's something that stuck out to me about your journey, personally and business wise. At the age of 35, with I haven't really met many people with a family of 5 kids and such, age of 35, and the scale of business that you have. So, and being a believer as well. So I definitely, my goal is to follow in your footsteps and just, glean all I can. So yeah, definitely appreciate you taking the time here for sure.
Yeah, I think that house hacking is one of the best. Like you can either go buy, you can buy a single family home to live in for $350, or you can go buy a duplex for $350. And
Yeah.
my wife and I briefly lived in, that was one of our, I don't know if that was our second or third house, but was a little duplex in Caledonia.
Okay.
And it was actually just sold that too. Yeah. Another word of advice is don't sell real estate that your wife is emotionally attached to without her permission. So I did make that mistake this year. She's like, "You sold what?"
That was the duplex.
Yeah.
Yeah.
So
Oh, man.
she doesn't want to be very involved in, the buy and sell real estate decision. So I sold the duplex and then let her know, and yeah. But that duplex is now turning into a retail center, so maybe I'll take her shopping in the real estate center and try to win her heart back. But
Right.
probably not. I don't think the Dollar General quite has the same
No.
emotional ties. So, anyways, we were in that duplex in Caledonia, and then that was just a cool small town to live in for a year, and we kept that. Like I just sold that, so we kept it. It's cool to like do the house hack.
Yeah.
Usually easy to get the financing for that and live on one side, and then when you're ready, you move on to the next one. And it's just that's a great way to scale early on. So
Yeah. Oh, that's reaffirming. I appreciate that.
It's harder. Like it's like I will fully admit that what I did when I did it was far easier. Like you had different problems. You had different, like occupancy wasn't good.
Yeah.
There's lots of vacancy. So you had issues like that. You had probably worse paying tenants, like a lot more payment issues. You had tenants were much less trackable then. Like now they're very trackable. They really care about what's on their record.
Yeah.
So there's things that are better today, but like you can't beat buying a single family house for,
Sure.
even those years after that, like buying a lot of single families in that 50 to 100K range. Like,
Right.
usually you could buy a single family for 50,000 and rent it out for $1,000 a month. And, those are just,
That's crazy.
you can't get those numbers today. So like
Yeah.
that was a kind of lucky time, if you will, to like, you could really grow real estate. Like you could actually make a business out of single family rentals much easier than you could today. So,
Yeah.
but we don't know what we're in for,
Yeah.
today either. So as we see these interest rates fall, like that's a great time to go buy that duplex for
Yeah.
$350 and do that house hack. And so,
I'll keep you updated.
okay. Yeah.
That's good. All right, to round us out, this will be just some quick ones. So a little shout out to you, add some color to what you're currently working on and some other stuff. So first one is, what are you currently excited about and working on? Whether that's a new venture or just someone you're looking to hire, stuff like that.
I'm excited about, we're buying a couple retail centers, and I just love kind of the reposition on those. Like we're buying one that currently that a hospital owns, and they have some of their tenants in there, and they haven't even been billing like the expenses that they're entitled to bill back to the tenants. They haven't even been doing that. So like the numbers are just, it's a disaster. Like the whole building is a disaster. So like we're, getting a reduced price to buy this disaster of a retail center.
Yep.
And so this will be kind of our first, like these other two retail centers that we bought have been managed better, but we've been able to improve them and renew leases and fill vacant spaces. And so now I'm just excited. This is like, it's almost like you're buying a real problem, but I know how good the numbers will be if it goes respectably well. So I think that retail center is one of the more exciting developments. Also excited about, I would like to buy some land in Montana soon, and don't know what that all entails, but I'd like that to be our next state. So
Cool.
those two things probably.
I love it.
Awesome.
How can the audience learn about you or find out more about what you guys do? I don't know if you guys bring on capital from investors still, or what do those things look like?
Yeah, there's at this moment in our business, we're man, I cringe saying this, that we're not looking for more capital right now, because that just sounds wrong to say. There are moments throughout the year where we will most likely be taking on new capital. I would just supply my email, and which is just calvinbeeke@gmail.com. So we don't have, we don't really have a website per se. It's not, the house flipping is all done through agents, so we really don't need like marketing on that side, and the industrial retail portfolio isn't, it's just kind of more of a private management of those assets. There's not really a way to, just email me, call me, whatever. I usually respond to email best, so that's how you can get a hold of me.
Awesome. Love it. Last one here is, what is one last key piece of advice? So it can be something you've already said or something else that you're thinking of, but one key piece of advice for our young audience who's kind of the entrepreneur, younger, getting started.
I think I'm just going to go back to that stick with the one thing approach, and I think you put some thought into what you're picking and to what you enjoy, but take that one thing and do it well.
Perfect. It's a great spot to end, because that's what your story displays, the power of focus and sticking with the one thing and iterating, getting better, and fine-tuning the process. Love it. Well, Calvin, thanks for joining us today. It was a pleasure to have you on.
Yeah,
thank you.
Thank you to
so
all
much.
of you guys. So it was fun, and anytime I do this, you learn some things about about yourself and about others. And it's always good to be able to to say those things and to learn through that. So
Awesome.
thanks for all your great questions.
Absolutely.
Of course.
Absolutely. Well, thank you guys for tuning in to the IntentionALL podcast, and we'll see you on the next one. Hey guys, thanks for watching. This is Aaron DJ here, the founder of IntentionALL. On IntentionALL, we focus on building businesses, entrepreneurship, and investing without losing everything else that matters. I want to take a quick second to acknowledge someone I work closely with. The audio and the video that you heard in this episode was produced by Alex Sikma, and beyond that, he hosts a podcast called Disruption. Disruption is a Christian-based show that explores theology, philosophy, and how to think through a biblical lens. If that kind of content resonates with you, I genuinely think that you'd get value from his work. You can find Disruption on all platforms, YouTube, Spotify, and Apple Podcasts, and I'll drop the link below.